Good morning, my dear friends. Referring to you now, valuation rules. As per the CGST rules 2017, we have rule number 27 to rule number 35. So many rules we have. Now, in these particular rules, we got latest updations by way of circulars of the CBIC in this regard. Meaning thereby, there are some amendments also taken place in these rules. In this regard, I am bringing to notice first and foremost rule number 27 CGST rules. Sir, rule number 27 when will come into picture? When the price has no sole consideration. Why not there is sole consideration? If any supplier deliberately, intentionally reducing the price and selling the product. In that class, last class I refer this point? Yes, I refer this point. Now still, I am now going to be just brief about this rule number 7 applicability. If the price deliberately reduced and supplying at that price only to penetrate the market, in that case, the law of the land here says that, hey, Mr. Supplier, for your supply of value of supply, valuation to supply. Rule number 27. In that clause, what says that? It says that open market value, the price available in the market to, in general, to purchase or to sell. If that open market value not available, refer the sum total of consideration equal to money value. Means partly in kind, partly in cash, like that payment received, for which we should have to have the sum total of consideration equal to money value. Last class I given the example, sir, a person selling the washing machine, for example, for rupees 1 lakh, but he received old laptop and also payment of rupees 40,000. Actually, the washing machine price is 1 lakh, but he received partly in cash 40,000, partly in kind 1 laptop. So the value of that laptop, where it is bartered for the part amount of the new washing machine, what is the value? The value of the old laptop 60,000 and the amount of cash 40,000. In return, he given new washing machine. Got the clarity? So from this, what you understand? From this, you understand two important points. One, if there is no open market value, then only we are referring the sum total of consideration equal to money value. What is sum total of consideration of money value? Partly in cash, partly in kind. The kind value should be arrived appropriately. Sir, that is difficult for us, sir. Is it so? Then sum total of consideration equal to money value also not apply. Then refer the like, kind and quality of the product. What do you mean by like quality, like kind and quality? Means what is your supply? When you supply? Sir, I supplied 1st of June 2025. I supplied, for example. What you supplied? 100 office chairs are supplied. Office chairs means cushion chairs are supplied. Okay. What is your brand? Yes, I am a brand. What's your name? Featherlight. Value deliberately reduced? Yes. In that case, open market value not available. Sum total of consideration equal to money value not available. Then like and quality. So how many chairs you supplied? 100 chairs, sir. Where you supplied? In South India, sir. Is it so? When you supplied? 1st of June 2025. At or about the time. Competitor. Par with, let us say, Godrej furniture. What is their price? Selling. That will be relevant. Like, kind and quality. You can compare Featherlight furniture with local market, a local person manufacturing, selling that furniture roadside. You cannot able to compare. It should be at par. and it should be at the time. You cannot compare 1971 price now in the year 2025. You got the clarity? So fine. In that case, if we able to arrive the value by inviting valuation rule, rule number 27, in that class C, which says that like, kind and quality, very good. Sir, difficult, sir. A unique product, sir. Like, kind and quality not available, sir. Okay. Then no other option. Come to rule number 27D, where rule number 27D, supporting, suggesting, inviting. Rule number 30, to arrive the value. What is rule number 30? Cost of that product, preferably required to certify by cost accountant. For that cost, add profit margin 10%. 10% from where you are derived? Rule number 30. Cost plus 10%. Simple to say 110% of the cost. Simple to say 110% of the cost is equal to the value of supply under rule number 30. I will explain to you rule number 30 in due course. Elaboratively, how to arrive the value as per the cost accounting standards. We have CAS 4 for kind consideration, cost of production for captive consumption, followed by cost of services. We have separate list is there. Which element of cost should be added in the cost, which element of cost should not be added. Cost accounting standard number 4 guiding us. That I will refer in due course. For the time you understand, as per rule number 30, the valuation is cost plus 10% is a profit margin. In short, 110% is of the cost. It may be cost of goods, it may be cost of service, as the case may be, no issue at all. Further, my dear friends, referring here for a kind consideration. In the given case, if rule number 30 is difficult, sir, cost is difficulty arises, sir, then rule number 31 you prefer, set by rule number 27 class D, and also set in that order. Refer rule number 30, if not rule number 31, in that order. That means one cannot directly enter into 31. Suppose 30 is not capable to solve your problem, then come to 31. Rule number 31 refers best judgment assessment, residual method, residual value. What do you mean this? The department officer, the proper officer under GST law, by using his best of knowledge, he will arrive the value. Of course, while arriving the value by the department officer under rule number 31, he will take the help of rule number 30, obviously. Now, what I referred here, open market value is aware of that fair market price. Sum total of consideration equal to money value, partly in cash, partly in kind. Coming to class C2 rule number 27, which talks about like, kind and quality. If all the three not apply, rule number 27D says refer 30, if not 31. 30, 31 separately I am going to take up, but already I referred rule number 31 in the last class, saying that rule number 31, best judgment assessment, where the department officer will arrive the value by using the best of knowledge, where the price deliberately kept below the market price, open market was not available, sum total of consideration equal to money value not available, further the like, kind and quality is not available, then by taking the rule number 31 into account, where the department officer arrived the value, while arriving the value, he taken the help of rule number 30. The case I referred in the last class is landmark judgment of the Supreme Court of India in the case of Fiat India Private Limited. Now, dear friends, here rule number 7, now I am going to conclude with a circular of the CBIC. What the Fiat India Private Limited says, Fiat India Private Limited says, which I referred in the last class elaboratively, the value under the GST, that time excise law, the value under the indirect taxes cannot be below the manufacturing cost. It should be cost plus some amount of profit. This is what the case law of the Fiat India Private Limited. Now what happened after the judgment of Fiat India Private Limited of the Apex Court, Supreme Court of India, many notices issued by the department to taxpayers saying that in your case you are selling below manufacturing cost. Therefore, I am arriving the value cost plus profit 10% on which you have to pay the GST. So far what you paid is short paid. The taxpayer crying, for me Fiat India Private Limited case not applicable. Why? Reason, I have not penetrated the price in the market. Market itself shrinked like anything. Market has been gone away from a given product. Demand not there. By force, I am selling below manufacturing cost. It is not my intention to sell below manufacturing cost. Permanently the price in the market fallen down. Department not accepted. Further started to demand the tax short paid. At that moment, CBIC issued a circular saying that, hey department officers, try to understand. Fiat India Private Limited judgment is a good in favor of the department only when deliberately, intentionally, wantedly reduce the price only to penetrate the price in the market. Then Fiat India Private Limited you invite. Their cost plus profit is equal to value of supply. A case where the person manufacturing laptops in India, selling in India, but unfortunately that manufactured laptop what he manufactured became obsolescence, meaning thereby outdated. Then his cost to manufacture is per laptop rupees 50,000, but he forced to sell at rupees 30,000 below manufacturing cost. Reason, otherwise entire loss will take place. To minimize the loss, the price permanently fallen down in the market because of the technology is obsolescence in the given case. Therefore, the seller selling it below manufacturing cost, not intentionally to sell. In such cases, you should not invite Fiat India Private Limited. You should not invite rule number 27 itself. Whatever the selling price offered by the seller, where the price permanently fallen down in the market, that itself is whole good, set by the CBIC in their circular. And moreover, they instructed department officers below the rank of the Commissioner of Central Tax not in a position to use Fiat India Private Limited. Fiat India Private Limited, based on that, want to issue the notice to recover the taxes. The officer should be commissioner and above the commissioner level officer, only competent to issue notices to invite Fiat India Private Limited case law to levy the tax. Otherwise, below the rank of the commissioners not competent to issue the notice in this regard, set by the CBIC. Got the clarity? Now please come back. With this, rule number 27 completed. Now entering into mega rule. Rule number 28. I use the word mega rule. This rule got now amendment in the recent past, and further circulars has been issued. Not only one circular, 2 or 3 circulars has been issued in this regard, elaborately dealt how to handle the value of supply and apply the GST thereon. First and foremost, rule number 28, when will apply? Transaction between distinct persons. As you are aware of that, distinct person means head office and branch office, as we understood under section 25 subsection 4 as well as 25 subsection 5 of the GST Act, where head office and branch office, that means having the one PAN number, multiple registrations under the GST law, we call them distinct persons. A transaction between distinct persons where head office supply the goods to branch office, or one branch office supply the services to another branch office, or branch office to head office supply of goods or services are both, where the branch office not charging nor head office charging, in spite of that, even though no consideration, the transaction between them covered under dash schedule 1, where it covered. Likewise, related persons, we refer related persons. Explanation to section 15. Explanation to section 15 very clearly says that where Mr. In the following cases, you people are called as related persons. What are they? Employee-employer relationship, directors of the company and the company. One company controls another company directly or indirectly. 25% and above. Voting rights or controlling interest. Also we referred partners of the registered partnership form. Also we referred the related parties, which includes the members of the same family. Family means section 2 subsection 49 referred spouse and their children, parents, grandparents, brothers and sisters of the person who are mainly wholly dependent on such person is called real persons. And transaction between real parties also be supply even without consideration, because they also be covered under schedule 1. Is clear? So rule number 28 belongs to supply between distinct persons, supply between related persons. Is it clear? Now, supply between principal and agent, which covered under the schedule 1 point number 3, not going to be covered under rule number 28. Why, sir? Principal and agent, between them, rule number, the schedule 1 point number 3 also be supply between consideration. Hey Mr. Understand, this principal agent covering under schedule 1 point number 3 for the relationship between them, supply between them without consideration, is we have separate rule to arrive the value, rule number 29, not rule number 28. So rule number 28 does not cover dash principal and agent relationship as referred under schedule 1 point number 3. Having this introduction to rule number 28, entering into it, if a transaction between head office and branch office where there is no consideration, even though it is a supply, how to arrive the value? First, rule number 28, sub number class A, rule number 28 class A, which refers open market value. First one, first priority, open market value. Fair market value. At or about the time of supply, refer the open market value. How to understand, sir? We need a clarity on it, sir. I will refer to this with a numeric example. At about the time of supply means on first, let us say today what date? Today 14th of April 2025, Tamil New Year Day. Happy New Year to all of you. Today the supply of goods from head office Hyderabad to branch office Bangalore dispatch. When dispatched? 14th of April 2025. As on that date, the price prevailed at the branch. You know branch. What's the branch? Bangalore. As on that day, for the given product at the branch, what would be the price? Sir, the branch price is per unit 100 rupees, sir. Okay. What is the price at the head office Hyderabad for the same product on the same day? 90 rupees, sir. Take the price of the branch. You are supplying to branch Hyderabad. So the price of the branch is open market. What rate per unit? 100 units. 100 rupees per unit. How many units you are supplying? 1 lakh units. 1 lakh units into 100 is equal to 1 crore rupee is the value of supply. Understand? 1 lakh units supplied from head office on 14th April 2025 from the head office Hyderabad to branch office Bangalore. The price at the head office Hyderabad 90 rupees per unit. How much? 90 rupees. Do not take that. Branch office price. At the time of supply, the price at the branch. Because you are destinating to branch, no. So open market value is relevant from that branch. The price at the branch for the given product per unit, how much? 100. Now you can ask me, sir, why the difference of price? Here 90 rupees Hyderabad per unit, 100 rupees different at a branch Bangalore. Why difference, sir? You know difference is carrying cost. You are aware of that? Carrying cost, transportation, loading, unloading. You get my point. Manufactured Hyderabad, Baba, but the goods went to where? Sent to where? Branch. So that additional expenditure is there, no. That's why the price prevailed in the branch for the given product is 100 rupees per day per unit. So that is relevant as open market value. Sir, not available, sir. That 100 rupees not available, sir, at the branch, sir. Oh, is it so? Yes, sir. Obvious reason, sir. Okay, leave it. In that case, rule number 28, class B says, like, kind and quality, you refer, like, kind and quality. So what about some total of consumption equal to money value? That is not there, no. That is not there, no. Head office will pay the branch office, or branch office will pay head office. For example, head office send the goods, 1 lakh units. Let us say 100 rupees per unit. Assume, which is 1 crore rupee, sent to branch, Bangalore. Branch will make the payment to head office or what? No. In that case, it is treated as what? Treated as supply. How to arrive the value? Open market value not available. Some total consumption does not arise. Reason single rupee won't come. Therefore, practically they straight away went to like, kind and quality of such goods. Any other manufacturers supplying to Hyderabad from Hyderabad to branch office Bangalore? Yes, sir. One person is there, sir. Who is he? My competitor, sir. Okay. What is the price? Sir, he is supplying at 95 rupees, sir. Okay. That 95 rupees more or less is like, kind and quality of the product per unit. So 95 rupees per unit multiply with 1 lakh units. 95 lakhs is the value of supply. Because how I derive this? Like, kind and quality has been taken into account by inviting the rule number 28, namely class B. Rule number 28, class B. Got the clarity? We have rule number 28, sub-rule number 1, in that class B. Got the clarity? Any difficulty? No difficulty. Fine. So, once you understand like, kind and quality, suppose, assume no other manufacturers are supplying such goods to the branch office from Hyderabad, sir. Meaning what? Like, kind and quality when I prefer as a second priority which is not available. Then rule number 28C. Rule number 28C says that refer the rule number 30, cost plus profit. Same. 110% of the cost is equal to value of supply. Cost should be derived as per the cost accounting standards. If that is not applied, or not able to fulfill the need, then refer the rule number 31. That is under the third category as a priority. In that, the first preference goes to rule number 30. Then second preference goes to rule number 31 in that order. Rule number 31 is the department officer will arrive the value by using the best of knowledge. That is residual valuation. Is clear? Default valuation. Now, listen to me, sir. These are all one line. Rule number 28, class A, class B, class C. And class A, class B, class C. Yes. So, I have to say here, we refer rule number 28. In that, sub rule number 1, class A, class B, class C. Class A is what? A open market value. I said to you open market value. Class B, sum total, the like kind and quality. Sum total percentage is not available, which is not required to refer also. Class C, under rule number 28, sub rule number 1, which is rule number 30, if not 31, in that order. It is one route. Having this, now, under this category of rule number 28, sub rule number 1, class A, class B, class C. Here, if you follow this and arrive the value, if not, under rule number 28, sub rule number 1, there are first proviso, second proviso. There are two provisions are there. This first proviso and second proviso now recently got amended. What is first proviso says? First proviso to rule number 28, meaning what? This is rule number 28, sub rule number 1. In that first proviso, are you getting my clarity? There, where the goods supplied as such, at the option of the supplier, value shall be 90% of the price charged by the recipient. What do you mean this? I will tell you here. One simple example. For example, head office, Hyderabad. Supply the goods. What goods supplied here? Cell phone. Cell phone supplied to branch office. Branch office where located? Bangalore. Branch office located Bangalore. Now listen to me. Who is the recipient? Bangalore. Supplier? Hyderabad. If so, for no consideration. In spite of that is a supply. Covered under scope of supply. Now, Bangalore recipient supplying cell phone. Cell phones sold. What price? Let us say cell phones sold for 10 lakh. Now recipient supplying the goods as such or by modification. Cell phone can you modify further? If you modify, it becomes scrap. Cell phone is a finished product. Head office Hyderabad, supply to branch office Bangalore. Branch office Bangalore selling that as such. In that case, hey head office, you have the option instead of going through rule number 28, sub number 1, class A, class B, class C, just look differently. There is a proviso. First proviso to rule number 28, sub number 1 says that, first proviso to rule number 28, sub number 1 says that you have option to choose 90% of the price at which recipient supplied to his customers. when the recipient supplying as such, meaning what you supplied, selling the same thing to the customer. Head office supplied cell phone, branch office selling cell phone, selling as such. In that case, what price selling the branch office? Look on the screen. What price selling to customer? 10 lakhs. On which apply what percentage? Apply on this 90% is equal to rupees 9 lakhs. 9 lakhs is the value of supply in the hands of head office. In the hands of head office, value of supply is 9 lakhs. On which you pay the GST. Is it clear? If the GST 18% IGST 18% is on what value? On 9 lakhs. So head office liable to pay GST. Head office liable to pay IGST is equal to how much? On 9 lakhs, 18% is equal to, quickly, fast. How much? 1,62,000 is the value of GST has to pay by supplier. Any doubt? Any doubt? Yes, absolutely. Rule Proviso 1 not applicable. Is clear? Now, shall I take a practical example, numeric example from the Rafi Sir desk? The desk of the Rafi Sir problems are the problems accepted by the CMA Institute final. Entire workbook, please give to us, said by the CMA Institute. The workbook is now going to come in a couple of days. The problems has been appreciated by the institute and accepted for their publication. That problem I am bringing, one problem. Let us see how many of you are going to answer this. One workbook I sent, have you got it? Yeah. Long back I sent. Check your Palanisar. Long back I sent. PC sir, check with the PC. I sent. Directly I can also send to you. Better to send to them means they can send to our online students also. Na? That's why I sent to them. It's available with them. Yes, please get it. Please get it. Producer will get it. Now bring into notice. Simplified problems. Comprehensive manner. Topic simple but application required. Valuation between head office, branch office. Rule number 27. Rule number 28. Rule number 28. Class A, Class B, Class C. Read with proviso. First proviso. Problem I am bringing here. Reading as follows. The same has been sent to you people also. The same. You have to analyze it, answer it by taking the calculator and piece of paper. These questions, workbook, soft copy is made available to you people. X Limited, owner of factory in Chennai, Tamil Nadu, and one depot in Cochin, Kerala. Depot in Cochin is required to obtain separate registration as they are considered as distinct persons under section 25 subsection 4 of the CGST. The goods manufactured in Chennai factory will be transferred to Cochin depot where it will be sold as it is. Particulars. Goods transferred from factory to depot on 8th February. Number of units transferred 1000. Price of at factory per unit 200, price at depot per unit 220, rate of IGST ad valorem 18%, goods actually sold at depot on 18th February 750, price as on 18th February at factory 220, price at depot per unit 250, ad valorem rate of duty as on that date, change of rate of tax taken place. GST rate has been changed to 12%. Fine. Find the value of taxable supply of goods and IGST liability in the hands of X Limited of Chennai. Note, depot in Cochin is not availing input tax rate, meaning thereby, if the goods selling as such, first proviso apply. When the first proviso apply, rule number 28, sub number 1, first proviso says that selling price, the price at which the recipient sells to the customer, on which 90% is the value of supply in the hands of supplier. Is it clear? Now, listen to me. In the given case, what is the price to be considered? I told you, you have to take open market value. Open market value. At the time of dispatch from the factory, what is the time of supply for supply of goods, forward supply, date of invoice, or last date to issue invoice? What is the last date to issue invoice here? When the goods sent from factory. When the goods sent from factory, 8th February is the time of supply because invoice not there. Why invoice not there? Because input tax is not availing. మనసిలాయ్ పురిదమ్మా అర్థమవుతుంది కదా? Yeah. Now, what is the price at branch? At the time on 8th February, Cochin depot, what price there? That is relevant. For how many units? Time of supply, actual sold 750, but dispatched from the factory Chennai to Cochin depot 1000 units. What is the time of supply? 8th February, at of dispatch. What is the quantity to be considered for supply? 1000 units. Actual sale immaterial. Understand that? What is the goods dispatch? Number of units? 1000. So 1000 units at the rate of price prevailing as in the rate of dispatch at the time of supply, price available at the branch or depot is the open market value. What price? 220. The value is equal to 2,20,000. Can you agree with me? What is the ad valorem rate of tax? Ad valorem rate means the rate is applied on the value of supply. There are some cases we are going to pay the tax based on the quantity. If based on the quantity, if you're going to pay the tax, which is non-ad valorem tax. If you're going to pay the tax, applying the rate of tax on the value of supply, the percentage of tax on the value of supply, we call it as ad valorem tax. Ad valorem means the rate of tax percentage is applied on the value of supply. So what's the value of supply? 2,20,000. What rate of IGST applicable here? If you apply, what rate of GST is there? Two rates of GST is there. Is a change in the effective rate of tax? No. Section 40 not apply. Reason? Last date to issue invoice. Time of supply. At the time of supply, what rate is there? 18%. Is clear? Payment does not come here. You get my point, sir? So, it is not come under the change in effective rate of tax category. Clear? So, at the time of supply, rate apply what rate? That is applicable 18%. 18% is of IGST equal to 2 lakh 20 is equal to how much? Huh? 90% is there. Very good, excellent. Shantini, excellent Raja. So, 2 lakh 20,000 on which 90% you apply ma first. 1 lakh 98,000 is the taxable value. Taxable value. If so, on that IGST, is equal to how much? 18% on 1,98,000. 36,000, 35,644. Excellent. This is what observation I required. Great. Answer I am showing for this. Is clear? Answer showing as follows. For just reference purpose, I did the answer by rough manner. The same presenting here as follows. 35,640. Excellent. Is clear? 90% only you have to take. When first proviso to rule number 28, sub rule number 1 applies. Got the clarity? Here, amendment came, my dear. Amendment came. When you refer here, especially rule number 28, sub rule number 1, first proviso here. When you refer here, they added one provision here. In first proviso, rule number 28, sub rule number 1. This second proviso, which says that this also rule number 28 only. Rule number 28, sub rule number 1, second proviso, where the recipient is eligible for full ITC, the value declared in the invoice shall be deemed to be the open market value of goods or services. That is very important to note. Proviso, second proviso to rule number 28, where the recipient is eligible for full input tax credit, the value of declared in the invoice shall be deemed to be the open market value of the goods or services. Is second proviso. How to understand? Just now I referred one example to you on the screen. Head office from Hyderabad supply the goods to branch office Bangalore cell phones. Bangalore branch selling as such cell phones. Then applying the first proviso, we adopted input tax credit not availing by branch. With that only we approach 90% of the price at which the branch supplying to the customer will be the value of supply in the hands of the supplier. With that only intention, we refer proviso 1. If proviso 2 comes into picture, if the branch availing full input tax credit, means branch is eligible to avail full input tax credit. Sir, what do you mean by eligibility of input tax credit? We have certain conditions. for availing ITC. If you satisfy the conditions, ITC allowed. If not satisfy the conditions, ITC fully not allowed or partly not allowed. Fully not allowed, blocked credit. Fully not allowed, blocked credit. Simple example. Partly not allowed, partly allowed means that you are using that inward supply to supply partly taxable output supply, partly exempt supply. In that case, the input tax credit proportionately attributable to exempt output supply, ITC partly not allowed. In that cases, first proviso to rule number 28, sub number 1 is final. In case where you are eligible to avail full ITC, meaning thereby you satisfied all the conditions to avail the input tax credit, section 16 of the CGST, section 17 of the CGST, section 18 of the CGST, you are whole good to avail the ITC. Full amount of ITC will be very good by you satisfy all the conditions of input tax credit chapter. Then avail the ITC. In this process, what is the price declared by the supplier is final. Value shown in the invoice is final because that much value on which GST passing the credit. Are you getting my point? Here I will bring one more example. Look here. This example, this question you refer here. This question referring here. This question belongs to what, ma? Rule number 28, sub number 1, proviso 2. Second proviso. So sub number 1, second proviso. Y Limited owned factory in Hyderabad, Telangana, and one depot in Vijayawada, Andhra Pradesh. Depot in Vijayawada is required to be obtained separate registration as they are considered as distinct persons under section 25, subsection 4 of the CGST Act. The goods transferred, manufactured in Hyderabad factory will be transferred to Vijayawada branch, namely depot, where it will be sold as it is. Depot in Vijayawada is availing input tax credit. Depot in Vijayawada availing input tax credit, meaning full ITC allowed. In that case, rule number 28, sub number 1, second proviso. Second proviso says the price declared in the invoice itself is open market value. See, goods transferred from factory to depot on 8th February. How many units? 1,000 units. Price at factory per unit how much? 200. Price at depot 220. 18% GST. Okay. Goods actually sold at depot on 18th February 750. Price at factory 220 at the time of 18th February. Price at depot 250. Advertisement rate of tax 12%. Find the value of taxable supply of goods in the, and IGST liability in the hands of Y Limited, Hyderabad, transferor, supplier. Now, listen. Full amount of input is availing. So, now look here. How many units are transferred? 1,000 units. What value will show by factory wala? The price available at the factory. What price is there? 200 will show. And price how much? 2 lakhs. Can you agree with me? 2 lakhs itself is the value of supply. IGST, what rate? 80% only apply. 36,000. This 36,000 full allowed ITC. ITC fully allowed. Now, here only clarification given by the CBIC brothers. My dear friends, you try to understand, here only clarification given by the CBIC. Suppose head office says I wanted to take 220 as a price. 220 as a price. 1 lakh into 220. That value I want to show in invoice. Show 2 lakh 20,000. On which pay GST. That amount whatever GST paying by head office, by the time reaching to the branch office can avail ITC fully. So revenue neutral. Then in that case, head office says, hey CBIC, tell me, can I consider in the given case value is 0? That means in the invoice you mentioned 0. That means ITC 0. Can I go with that logic? CBIC said, I know you are intelligent. Yes, you are allowed to have value 0. That 0 is the value is considered open market value. You get my point. Reason, whatever head office paying the GST, full amount ITC will be allowed to branch office. You pay here, take their credit. In that case, I won't pay here. Can I transfer the goods? Because if I transfer these goods, where if any 1 rupee GST, full amount ITC allowed to branch. ITC fully allowed branch. That type of goods only I am supplying. If so, branch can avail ITC fully, yes. In that case, if I have not issued the invoice, also the value will be taken as a 0. Clarification we have here for your kind consideration. Look here. Second proviso to rule number 28, sub rule number 1. Clarification on valuation of supply of import of services. Clarification of supply of import of services. Look to me and refer here. What I said, head office from Hyderabad sending 1000 units to branch office Bangalore. Branch head office says, I will treat the value 0 is open market value. Sir, I want to mention some value in the invoice. That value is open market value. Invoice say issue padle, sir. I am not issuing the invoice. Not issuing the invoice at all, sir. In that case, the value declared as 0. Open market value 0. When these are possible, only when your output supply is an input supply to the branch, where the recipient eligible to avail full ITC. In such scenario, whatever the value declared by the supplier in the invoice is the open market value. If it declared 0, 0 is the value. This is the prevalent situation in India. If there is a case, a transaction took place, import of services, cross-border transaction. In the case of import of services, location of supplier outside India, recipient in India, place of supply is in India, is called import of services as defined under section 2, subsection 11 of IGST. In that case, head office outside India, branch office is in India, the recipient being a Indian counterpart, receive the goods or receive the services. Receive the services. If receive the services, FCMA, RCMA, forward charge, reverse charge or no charge. Branch office in India, import these services from head office outside India. Head office, Hong Kong, branch office in India, in Bangalore, import these services. Is it forward charge, reverse charge or no charge? Reverse charge mechanism. Recipient liable to pay IGST. Who is recipient here? Branch office. What is the value? Value is not there because head office only supply the services to branch office. Valuation, how to arrive? Invite, rule number 28. In that rule number 28, sub rule number 1, we have a class A, proviso 1, proviso 2. Is clear? Now, if proviso 2 applies, rule number 28, sub rule number 1, Proviso 2 applies. In case the recipient in India availing full input tax credit, the value supplied, the value declared in the invoice for the supply is the value of supply. In this case, if the invoice not issued, in that case, who will issue the invoice first of all? That is important to note. Yes, recipient should issue the invoice as per section 31, subsection 3, class F. Section 31, subsection 3, class F, which got modified. If the recipient is required to issue the invoice, where the supplier is an initial person under RCM, the recipient should issue the invoice within 30 days from the date of the receipt of the goods or services. Is a provision. Am I right? Now, the recipient says, I will issue the invoice 0 value. Issue. 0 value, 0 tax. 0 tax, not required to pay tax. No, sir, I want to issue invoice 1 lakh value. Issue 1 lakh. IGST, 18% for example, 18,000. Pay the GST, avail the ITC. Your recipient is paying the tax. Recipient availing the ITC because full ITC available case. For the recipient, that inward supply eligible for full input tax credit. Then only second proviso will come. There, the value whatever declared by the recipient under reverse charge mechanism while issuing the invoice is an open market value. Said by this circular number 210 class /4 2024 GST dated 26th June 2024. Is clear? The entire circular you read and you understand. What I explained to you is as such you can able to come across. Got the clarity? Got the clarity, yes or no? Now, my dear friends, this circular, I want it to be read. Shalini, you hold this and read among. That circular alone, please. Record to read.
Second Proviso Rule 28 subsection 1 of CGST Rules 2017 clarification on valuation of supply of import of services by a related person where recipient is eligible to full input tax credit. In case of import of services by a registered person in India from a related person located outside India, the tax is required to be paid by the registered person in India under RCM. In such cases, the registered person in India is required to issue self-invoice under section 31 subsection 3 clause F of CGST Act and pay tax on reverse charge basis. It is clarified that in cases where the foreign affiliate is providing certain services to the related domestic entity and where full ITC is available to said related domestic entity, the value of such supply of services declared in the invoice by the said related domestic entity may be deemed as open market value in terms of second proviso to Rule 28 subsection 1 of CGST rules. Further, in cases where full ITC is available to the recipient, if the invoice is not issued by the related domestic entity with respect to any services provided by the foreign affiliate to it, the value of such services may be deemed to be declared as nil and may be deemed as open market value in terms of second proviso to Rule 28 subsection 1 of CGST rules. Yes.
So, my dear friends, this and all, generally, I will explain. I won't read. Once I explain means, it should be draw attention on the entire portion of the circular. Is clear? Shall I proceed further? What we understand? Rule number 28, sub number 1, class A, class B, class C. Read with first proviso and second proviso. Second proviso will come only when full ITC is eligible on such inward supply. Is clear? Now coming to my dear, rule number 28, sub number 2, mind blowing. Rule number 28, sub number 2 is a mind blowing again. What do you mean this? Have you heard? Corporate guarantee. Corporate guarantee. Meaning what? I will tell you. Corporate guarantee case. Rule number 28, sub number 2 says valuation. Here also we have the provisos. Now, what is corporate guarantee? My name is, let us say, TCS Limited. My name is TCS Limited. TCS Tata Consultancy Services, one of the group of companies of the Tata Group. Am I right? Now, coming to Tanix. You know Tanix? Tanix. Tata Group. Selling gold, jewelry, platinum, Tanix. Selling diamonds and all. Now the Tanix is a separate entity, but under the group of Tata Group of companies. The Tanix wanted to purchase gold, which is almost all 100 crores. They want to buy the gold and buy the ornaments. 100 crores gold they want to purchase. From where they want to purchase the 100 crores of rupees of the goods? Means from a banker. Banker only will sell gold. You are aware of that? In India, who will authorize to import the gold? The big merchant followed by government, namely government. Banks, scheduled banks are permitted to buy unlimited gold. They can buy. From that 100 crores worth of the goods from the bank, Tanix company wanted to purchase. Banker asking, hey Tanix, pay 100 crores and carry gold. Tanix says, I have no money. Can you give the loan to buy that particular gold? Tanix approached bank for the want of loan to buy that gold. Bank said, State Bank of India said, you want loan 100 crores, I will pay. 100 crores full finance I will pay. Loan I will give. But somebody should give the guarantee. Somebody should give the guarantee. Then the Tanix approached. It's one of the group of companies, TCS company. Hey, TCS company board of directors, look here. Could you please provide the loan guarantee for the bank? Why they approached to TCS? TCS company and Tanix company related parties. How related parties? Same group of companies, and moreover TCS, for example, TCS holding in the Tanix, for example, let us say 40% shareholding. How much? 40% shareholding. 25% is sufficient to call the middle parties. Now they are holding 40%. Therefore, Tanix approached TCS company for the want of guarantee, corporate guarantee. Tanix, when approached, TCS company, one of the director, eminent person, one of the director, very close, a thin relative of a Ratan Tata, one of the director, very wealthy person. Tanix, you want guarantee? I will provide. Who said? A director of a TCS. To whom? To the Tanix. Tanix is happy. Vanga sir, please guarantee. Then in letterhead, director of TCS as individual who is a very wealthy person, high net worth person, high net worth, approach the bank. Hey bankers, SBI, I am giving the guarantee as a director of TCS. It is one of the group company, my related company. I am giving the guarantee to Tanix 100 crores. Even single rupee not paid, I am ready to pay with the interest. Bank very happy, given the corporate guarantee. Is clear? Now, for making availability of that particular loan to Tanix, who given the guarantee? Director of its parent company, who is an individual. Can give guarantee? Yes, can give the guarantee. For doing so, the particular wealthy person, the director, very high net worth person who given the guarantee to Tanish. On behalf of the Tanish, on behalf of the Tanish, on behalf of the Tanish, he given the guarantee to please pay 100 crores. Banker agreed and granted 100 crores. For doing this activity, Mr. Director provide certain services to that particular Tanish. What service provided? A guarantee provided is a service for which Tanish says, sir, we are very happy to you for your hospitality. The moment we approach, you given positive reply to us and given the guarantee, we got the loan of 100 crores, sir. We are, as a token of love and affection, we are paying some consideration, sir. 2 crores. Sir. Who given? Tanish is given. To whom? To the director, individual. Director individual says, hey Tanish, don't underestimate me. I am a highly wealthy person. You are also one of my company only. I have almost a 40% stakeholding with you. And moreover, you are paying 2 crores to me. Is not acceptable as per the RBI guidelines. Reserve Bank of India given the guideline, if the director of a company giving a corporate guarantee to its related companies, they should not be charged consideration. If charged, the consideration is an offense as per the guidelines of the Reserve Bank of India. Got the clarity? Therefore, Tanish, don't pay single rupee. Keep with you. When I come to your place, give me tea or coffee, enough. Said by director. Now in the given process, my dear, coming into point. What is the point here related to now? Director of a company given guarantee, corporate guarantee to another is related company. That director and this related company are the related parties? Yes or no? Covered under related parties? If so, director not charging the charges, not required to charge as per the RBI guidelines. Now the point comes into picture. Supply made by director to the company, it is none other than even without consideration is a supply. Schedule 1 will come into picture. Here CBIC given clarification. Since as per the RBI guidelines, consideration should not be charged. Consideration is 0. As a result, that 0 is the value of supply in the given supply made by the director as a corporate guarantor to the corporate company where they are related parties. Got the point? Is going to hit where? Schedule 1. Even without consideration, supply made by director to the given corporate company by giving the corporate guarantee is a supply. As per the RBI guidelines, it is should not be charged the value consideration. Consideration should be 0. That consideration is 0 set by RBI is considered as such whole good as a 0 consideration in the given case where the director made a corporate guarantee to its related company. Is clear? Since the value is 0, no consideration, no GST. Even though they are related parties, you take the consideration as a 0 set by the CBIC. Is clear? It is with regard to corporate guarantee given by individual director of a company to its related company. Is it clear? Now coming to the second part. Corporate guarantee. Rule number 28, sub number 1. Rule number 28, sub number 2. Valuation in the case of corporate guarantee. One corporate company given the guarantee to another corporate company. For example, Tanish approached TCS company itself coming forward to give the guarantee. Now the director of TCS company itself coming forward. TCS company is a corporate company. Corporate company giving the guarantee to its related party. In that case, there is a consideration. Even though consideration even though no consideration is a supply as referred in schedule 1. Point number 2. Got the clarity, my dear friends? Corporate guarantee, you understand that? The individual director giving the corporate guarantee, not a supply. Understand means zero value of valuation. If corporate company giving guarantee to another corporate company, basically they are the related parties. In that case, even without consideration is supply. How to earn the value? How to earn the value where there is no valuation? Are you getting my point, sir? Tanish company when approach TCS company for the want of 100 crores of loan guarantee, TCS company itself coming forward. Board of directors of the TCS company pass the resolution giving guarantee to Tanish, which is the related party. And Tanish says, you want any consideration? TCS company says, no, not want any consideration. Keep with you. Because you are my one of the related company. If no consideration, schedule 1 will hit or not? Schedule 1 says what? Transaction between related parties even without consideration supply. Then what is the value of consideration in the given case in the hands of the TCS company, which is giving the corporate guarantee to Tanish? Refer the rule number 28, sub number 2. Rule number 28, sub number 2. Now referring here. Rule number 28, sub number 2, which says that value of supply is equal to 1% of the amount of such guarantee offered or the actual consideration if the charge, whichever is higher. Whichever is higher. Are you with me to understand this? Here amendments taken place. Here amendment taken place. Rule number 28, sub number 2, where valuation equal to 1% of the value of the corporate guarantee offered or rupees actual consideration among the two, whichever is higher. If the actual consideration is nil, then 1% of the corporate guarantee amount is equal to value of supply on which you pay the GST. Is clear, my dear? Here, recently, circulars has been issued by CBIC. Almost a 2 circular here. Here one circular, 204. Circular number dated 27th October 2023. Followed by one more circular is there. Circular number here, notice number 12 is issued, as well as one more circular 225 dated 11th July issued. There are so many things are there. All I will sum up in a simplified manner. I will explain to you. Got the clarity? Now come to the point. In the given case, my dear, rule number 28, sub number 2, corporate guarantee. Rule number 28, sub number 2 is only belongs to corporate guarantee, nothing else. Valuation, corporate guarantee between related parties. Is clear? Now, between related parties, between distinct persons also, you can say. Now listen here. 1% is said, 1% is. Now, sometimes what happens, no sir? Corporate guarantee, let us say for 100 crores. 100 crores guarantee for how long? There may be term of the loan, term of the guarantee. If the term of the loan fixed as 5 years, loan how many years? 5 years. Guarantee also goes hand in hand for 5 years. Corporate guarantee also for 5 years. Is clear? Now you said 1%, as per the general mathematics, percentage generally denotes per annum or per month or per 6 months. Whenever I say percentage per annum, excellent, that has been now inserted. This 1% is per annum. Now, fixed term how much? 5 years. 1% is per annum on 100 crores. 1% equal to 1 crore. For 5 years is equal to 5 crores. That you compare with actual consideration. Sir, actual consideration is, let us say, 30 lakhs. 30 lakhs per annum. 30 lakhs per annum. Every year guarantee, every year has to pay consideration. Is agreement. For example, thesis company says, hey Tanish, you give me 30 lakhs consideration for giving the corporate guarantee. Okay sir, said by Tanish. In that case, Tanish paying how much per annum? 30 lakhs. For a corporate guarantee of how many years? 5 years. 30 lakhs into for 5 years. How much? 1.5 crores. 1.5 crores or 5 crores, whichever is higher. 5 crores is the value of supply. 5 crores is the value of supply on which GST apply in the hands of the supplier. One point clarified. Now the point arises, sir, it is not a 5 years fixed term, sir. Corporate guarantee for 1 year, renewable for 5 years. Before that, I would like to bring to a notice practical examples. Rather than to orally spelling like this, I will take this in. Now, have you understood? 1% on the corporate guarantee is per annum or any other pattern. Per annum is an amendment. I will show you the amendment here. Look here. 1% per annum is inserted by the notification number 12/2024 dated 10th July 2024. Page number, your page number comes into picture here. What is the page number, Amma? 239 or whatever may be. The page number changes from publication to publication, but concept won't change. Rule number 28, sub number 2, 1% per annum. Compare with actual consideration, whichever is higher. Is it clear, bro? Now, what I am referring to you, rule number 28, sub number 2, valuation in case of corporate guarantee. Is clear? There 1% per annum on the corporate guarantee amount or rupees actual consideration among the two, whichever is higher. Is clear? In this process, bringing to a notice, let us take into account one particular computation. When a corporate guarantee is issued for a specific amount, but the loan only partly availed and not availed at all, how the valuation takes place? What do you mean this? Corporate guarantee in our given example is 10 crore, Amma. Given example how much? 10 crore. I will explain series of examples, which includes 5 years fixed term or every year renewable also will come. Part by part, step by step we will go. Step by step we will go. Sir, corporate loan. Corporate loan required how much? 10 crores. Corporate loan guarantee is given by corporate company. How much value corporate guarantee? 10 crores. Banker sanctioned. Yes, Mr. So and so, your parent company given the guarantee to me. I satisfied 10 crores account open for you. You can withdraw loan amount of up to 10 crores. But that particular company which has facility to avail the loan not fully utilized, drawn only part amount, then how to arrive the value? As per rule number 28, sub number 2, corporate guarantee. The padayappa, what is a corporate guarantee? 10 crore. That 10 crores only guarantee is given by corporate company is a value of supply. Whether the person avail the loan fully, partly, not availed, immaterial. Is it clear? Then for a corporate company who given the corporate company loan guarantee for 10 crores, what is the value of supply? 1% of 10 crore or actual consideration, whichever is higher. Sir, in the given case, the person availing the loan only part amount availed, sir, but not availed fully, sir, immaterial, sir. Then what is the time of supply? Listen, what is the time of supply for a corporate company which is given corporate guarantee? Time of supply when the guarantee is given, loan has been sanctioned. Time of supply, see here, time of supply in the given case. Here, here eligibility, here 1 minute wait. 10 crores na, 10 crores, 10 crores. Actually availed how much? Here they availed, here they said, but only 6 crores availed, 4 crores not availed. So what? Value of corporate guarantee how much? 10 crores, on which 1% is 10 lakhs is the value of supply, on which GST applicable 18%, 1.8 lakhs. Outcome, GST liable to pay by ABC Limited. ABC Limited is given a corporate guarantee to its related company. Look here, ABC Limited given corporate guarantee to its one of the company called as XYZ Limited by getting the loan from PQR Bank. ABC Limited given the corporate guarantee to PQR Bank for getting the loan by XYZ Limited. XYZ Limited and ABC are real parties. Supplier is ABC, recipient here is XYZ. Got the clarity? Got the clarity? In that case, in the hands of ABC Limited, liable to pay GST 18% on 10 lakhs of valuation. How got 10 lakhs? 1% of 10 crores. Even though that particular XYZ company availed loan, how much? 6 crores. Immaterial. Entire value of corporate guarantee is a time of supply. The guarantee given, corporate guarantee, bank has sanctioned that particular guarantee. Yes, ABC Limited, your guarantee we accepted. Loan is opened, loan is granted, is a time of supply. Liable to pay GST by supplier, which I will explain to you furthermore also. Is clear? One part is clear. Furthermore parts are there. My system little bit stuck up. I do not know why it's stuck. Now furthermore point. So from this what you understand? The claim is valid irrespective of the amount of loan disbursed, the time of loan disbursed. Time of loan when part by part receiving by the company from the bank, immaterial. Actual availment of a loan amount, immaterial. Guarantee given what value is material. Further, now What about Bank A? Bank A is given a corporate guarantee. I mean, corporate loan for a corporate guarantee. Here, let us say ABC Limited provides corporate guarantee loan of 20 crore taken from its related 20 crore taken by its related entity XYZ Limited from Bank A. So, who given the loan? Bank A. Who given the corporate guarantee? ABC. Who taken the corporate guarantee? XYZ. Is clear? Huh? Now, this corporate guarantee given to Bank A by ABC. Now, Bank A shifting that loan to Bank B. Shifting that to Bank B. Loan is shifting to Bank B. Now, Bank B considered same corporate guarantee what is given by ABC to Bank A is whole good for Bank B also. If so, just because of the banker is changed, again corporate guarantee valuation will come into picture to pay the GST. The law here says no. No. Suppose if Bank A transferred to another bank, Bank B, this corporate loan amount and the corporate guarantee, Bank B says, I want fresh guarantee. Bank B says, I want fresh guarantee. Hey, ABC, I want fresh guarantee. If that comes into picture, ABC again giving the guarantee to Bank B is the value of supply. There are two situations, Amma. Bank A shifting its corporate guarantee loan amount to another Bank B. If so, Bank B not asking any corporate guarantee. Whatever corporate guarantee given to Bank A is whole good for Bank B also. In such case, no valuation, not a supply. If the Bank B demands, Bank B required fresh guarantee, then is a supply. Look here. Case 1, you take case 1. Assignment of existing corporate guarantee. A bank given the guarantee loan to XYZ Limited. Now that bank shifting. Later, Bank B take over the loan amount from Bank A. In that case, no new corporate guarantee is issued. In that case, there is no supply. Value of supply does not arise because not a supply. Is clear? Case 2. Issuance of a fresh corporate guarantee where Bank B taken over the loan from Bank A. New corporate guarantee is issued by ABC, warranted to issue. In that case, what is the corporate guarantee amount? Which is 20 crores. The 20 crores, a new guarantee is given. Then again 1% of the 20 crores or actual consideration, whichever is higher is the value of supply. Here no consideration is mentioned. Therefore, 1 crore, 1% on 20 crores equal to 20 lakhs, on which GST will apply again. If separate guarantee is issued, fresh guarantee is issued to Bank B, loan is same amount only, same XYZ, same ABC. Generally, no need separate guarantee. If B bank says, I want, otherwise don't come to my place, go. Banker A says, yeah, I sold my entire business to Bank B. I'm Bank B taken over Bank A. As a result, Bank B comes into picture. In that case, Bank A given the loan 20 crores to XYZ Limited. Now is a loan given by Bank B. Bank B says, no separate guarantee required. Already given the guarantee is sufficient for me. Such a transfer of loan from one bank to the bank, not a supply. On the other hand, Bank B says, no, I want fresh corporate guarantee. Same loan amount of 20 lakh crores. Okay, in that case, is a value of supply in the hands of corporate guarantee. Corporate guarantee given by corporate company to its third party. ABC Limited has to pay GST 1% of the corporate guarantee freshly given to Bank B or actual consideration received from XYZ Limited, whichever is higher. Is clear? What doubt? Loudly.
The supplier will be ABC and the recipient is XYZ. So, in case of issuance of such corporate, the already available liability will be closed.
No, availed only. Is availed. ITC போகக்கூடாது நீ இப்போ. ITC போவே கூடாது. It's premature to refer. It's clear? ITC will automatically come. What's the problem in it? Nothing. ITC is availed. 2 times paying, therefore 2 times having the ITC. So what? Is clear? And better not to disturb yourself at this junction with the ITC. I will conclude now, because so many examples are given, it runs 5 to 6 pages. Only corporate guarantee. Is clear? Now, in the given case, Bank A to Bank B, when the loan shifted, no fresh guarantee required, not a supply. If fresh guarantee required, then is a supply. Is clear? Further. Now coming to corporate guarantee given by multiple co-guarantors. 2 or more companies coming together giving the guarantee to its related party. Is clear? In our given example, we take company A, company B and company C. Company A and B jointly together given the corporate guarantee to a bank. For giving the guarantee to C Limited. A, B, C related parties. Look here. A company, B company jointly provide the corporate guarantee 1 crore on behalf of related person, company C. Is clear? A, B, C related parties. A, B, C together giving corporate guarantee to obtain the loan from the bank by C. In that case, loan amount is corporate amount, guarantee amount is totally 1 crore. Totally how much? 1 crore. Equally given the guarantee by company A and company B, 50 lakhs and 50 lakhs each. So what is guarantee amount? 50 lakhs each. Total corporate guarantee how much? 1 crore. No specific consideration is paid, either co-guarantor. Paid to either co-guarantor means C Limited not paid single rupee as a consideration to A and B. In spite of that, even though no consideration is a supply. Schedule 1 covered. Therefore, what's the value? The valuation in the case is 1% of the total value of the guarantee amount. 1% of 1 crore equal to 10 lakhs or actual value 0, whichever is higher. Higher is 10 lakhs is the value of supply. This 10 lakhs value of supply is divided between A and B equally for A and for B, for A and for B, 5 lakhs and 5 lakhs. On 5 lakhs, A liable to pay 18% GST, 90,000. B liable to pay on 5 lakhs, 18% GST, 90,000. Is clear? Got the clarity? Any difficulty with scenario 1 here? Co-guarantors coming, 2 or more companies coming together to give the guarantee. Which guarantee? Corporate guarantee. To whom? To its related person. Now, if equally given, this is the provision. If unequal ratio, meaning what? Company A contributing 60% of the guarantee amount. Company B contributing 40% of the guarantee amount. Guarantee amount how much? 1 crore. 1 crore divided into two parts, A and B. A goes to 60 lakhs, B goes to 40 lakhs. Like that, the corporate guarantee giving by A and B together to a bank for obtaining the loan by C. In that case, whether there is actual consideration is there. Here, there is no actual consideration taken into account. In that case, 1% on what? On 1 crore, which is equal to 1 lakh. This 1 lakh is divided into in the ratio of 60:40, the corporate guarantees. That is 2:3. Here 3/5, 2/5. 3/5 is equal to how much? 60,000 for A, 40,000 for B is the value of supply, on which apply GST, 18% GST, 18% GST is equal to 10,800 for corporate company A, 7,200 for corporate company B, liable to pay GST. Got the clarity? Further, if two or more companies coming together giving the corporate guarantee, where there is actual consideration also involved, in that case, look here, company A, company B jointly provide guarantee of 1 crore on behalf of company C. Now A, B, C are related parties. Sharing A and B is equal to equally. So A is giving corporate guarantee for 50 lakhs, B is giving corporate guarantee for 50 lakhs. Together it is equal to 1 crore. Is it clear? In that case, actual consideration paid by C to A, 80,000, C to B, 70,000. So total consideration how much? 1 crore, so 1 lakh 50,000, correct? Now on 100 lakhs, 1% is equal to how much? 1 lakh. 1% of the corporate guarantee amount equal to 1 lakh. Actual consideration is equal to 1 lakh 50,000. Whichever is higher. Which is higher? 1 lakh 50,000 is higher. If so, out of 1 lakh 50,000, what is the amount contributed by A? Got the consideration? 80,000. So here for A, 80,000 is the value of supply. For B, what is the value? 70,000. Here GST rate 18% on 80,000. Here on 70,000, 18%. How much comes GST? For 80,000 GST for A, 14,400, followed by B, 18% 70,000, 12,000 is a GST liability has to pay by A and B by giving the corporate guarantee. Is clear? Any difficulty, my dear friends? The same has been given for kind consideration as an answer. Further, take another issue. GST payment on intra-group corporate companies. Intra-group corporate companies. What do you mean this? How to understand this? Here, again the law got amended in such a manner that what you are referring, my dear? You are referring what? Rule number 28, sub number 2, where corporate guarantee valuation between related persons or distinct persons. 1% of the value of the corporate guarantee amount or actual, whichever is higher. Here amendment 1% per annum. 1% per annum. Is clear? So we analyze so many scenarios. These entire scenarios were explained, a recent circular issued by CBIC. Recent circular issued by the CBIC in this regard. I said to you, circular number also I refer for a kind consideration in this regard. by saying that a recent circular has been issued. Circular number, notification number 12, followed by circular number 225. Circular number 225 oblique 19 2024 GST dated 11th July 24. In that circular elaborately listed. The circular I am not reading as circular, I am bringing as a problems, numeric example, straight away understand. In this regard, I am bringing to notice one particular situation where CBIC given the clarification stating that as follows. Referring to GST payment on intra-group corporate guarantee. Intra-group corporate guarantee. In the sense, import of services. In the sense, import of services. Holding company outside India. Subsidiary company in India. Indian counterpart import these services, means receive the services. Here amendment taken place. What amendment taken place means, my dear? Rule number 28, sub number 2. I will show you that particular amended provision here. If you refer earlier, before the amendment, in the given case here, if you refer, in the given, if you read carefully, value of supply of services by a supplier to a recipient who is related person, that much only is there. The recipient, related person, where he is located not given. The recipient is understood both are in India. Location of supplier, location of recipient in India. That's why I said TCS company, Tanishq company. Both are in India. Suppose TCS outside India is red company, Tanishq in India. In that case, Tanishq supplied corporate guarantee to TCS outside India or outside India. TCS giving the corporate guarantee to recipient in India. The two situations may come. One is outside India, head office, holding company outside India, subsidiary in India. In that case, subsidiary may provide to holding company or holding company may provide to subsidiary company, or other way around. Holding company in India, subsidiary company outside India, holding company from India giving corporate guarantee to outside its subsidiary company. Outside the India, subsidiary company located, holding company from India giving the corporate guarantee. Meaning what? This is export nature, where 0% apply. Problem will apply. Problem will come into picture. To avoid the problem, in this particular rule number 28, sub number 2, while reading, value of supply of services by supplier to recipient, who is real person, added, who is located in India. The recipient should be in India, thereby truly to bring the spirit of import of services. Is an amendment, is there in the material. Where it is there? In the particular notification. Look here, amendment with effect from 26th October 2023. They said value of supply of services by a supplier to a recipient who is related person. Now added, located in India. Now added. Meaning thereby, if I simplify manner to say that head office in India, the holding company in India, for example, holding company in India, it's red company, subsidiary outside India, holding company in Hyderabad, subsidiary company in Singapore. holding company from India giving corporate guarantee to its subsidiary company in Singapore. Rule number 28, sub number 2 will apply. Not apply. Set by CBIC in the given circular. Is clear, my dear friends? Now, coming to the issue number 5 here in our material, which I am bringing for your kind consideration. Look and understand. A corporate group of companies, intergroup transactions, intergroup. Scenario 1, my dear. A domestic corporate company, company A, parent company in India, issues a corporate guarantee to a bank on behalf of its subsidiary company, also in India. Very good. Both are in India, no problem. So recipient in India, na? Good. In that case, guarantee how much? 1 crore. Such both entities are domestic rated. GST is applicable under the forward charge. Who liable to pay GST? Supplier liable to pay GST. What is the value of supply? 1% of 1 crore is equal to 1 lakh. 1 lakh is the value of supply on which GST 18%. 18%. Who liable to pay GST? Supplier. Is clear? Recipient can avail ITC? Yes. Partly or maybe whatever may be the ITC. Fine. Come to the scenario. Foreign intra-group corporate companies. Parent company X located overseas. X is a parent company. Its subsidiary company or is a group company in India, company Y. Where it is located? In India. X where? Outside India. Company Y in India. Both of them related parties. In that case, guarantee amount 20 crores. Who offered the guarantee? Parent company X, overseas company, issues a corporate guarantee to a bank on behalf of its wholly owned subsidiary company in India. That means recipient is in India. Corporate guarantee. Rule number 28, sub number 2 apply? Yes. Corporate guarantee 20 crores. On 20 crores 1%. 2 lakhs is the value of supply and actual consideration, whichever is higher. Who liable to pay GST in the given case of import of services? Company X or company Y in India? Company Y in India under RCM. Is clear? On 2 lakhs, 2 lakhs comes Sama? 20 lakhs will come, Raja, not 2 lakhs. 20 crores. 20. Look here. 20 crores. Correct? 20 crores. Is clear? Now, on which what percentage I said? 1%. That means 2 zeros are over. Then how much left over? 20 lakhs. Got the clarity? On 20 lakhs, 18%. 18% applicable rate by default for corporate guarantee. 3 lakh, 6. Who liable to pay GST? Under RCM. Y company Y. Who required to issue the invoice? Y. Can avail ITC? Yes. Wait. Don't go. Don't run away. Come along with me. Holding my finger, please come. I will take you to the place. The place name is called Super Success. Relax. I know, my dear. You people know the subject. I know that. I'm just making you in a shineable manner, glittering manner. Up to this, no problem. Furthermore is there, na? I'm coming. Now, one more issue take. Discharge of tax liability on corporate guarantee. If the corporate guarantee a fixed term of 5 years, sometimes before I said na, 5 years term corporate guarantee. Guarantee amount how much? 10 crores. 10 crores for 5 years. 1% on 10 crore per annum for 5 years. Per annum amendment. So 1% on 10 crores is equal to 10 lakhs. 10 crores, Raja. On 10 crores, 1% equal to how much? 10 lakhs. 10 lakhs per 1% per annum. For 5 years, 50 lakhs you take. 50 lakhs. If it is corporate guarantee for 5 years term, fixed term. Compare with the actual consideration. Actual consideration is given here 3 lakhs per annum. 3 lakhs per annum multiplied by 5 years is equal to 15 lakhs. 15 lakhs or 50 lakhs or 50 lakhs, whichever is higher. Which is higher? 50 lakhs. 50 lakhs is a corporate guarantee consideration in the hands of a supplier, on which liability pay GST 18% is equal to 9 lakhs on 50 lakhs. So liability pay 9 lakhs. What is the time of supply for the entire value? 10 crores per year, no problem. 10 crores for 5 years, fixed term. Time of supply is equal to issuance of the corporate guarantee for the full value, for the full tenure. 10 crores for full tenure. Whether avail the loan or not to avail, utilize the loan, not utilize, up to you. Available for utilization. When the guarantee is given, the issuance of the corporate guarantee, meaning thereby granting the guarantee, granting the loan by the banker. You issue the corporate guarantee, sir, but bank should accept, no? Banker accept, yes, corporate guarantee accepted, loan available for you 10 crores for 5 years is the time of supply. Is clear? If corporate guarantee given, banker rejected, poor fellow, go. If they say no supply, corporate guarantee, banker should accept, no? This company given, worthy company, to its related party, sir, your guarantee well accepted. Hey, company, you want loan? Come and take. Loan is open for you. Banker said. So corporate guarantee is given, meaning thereby loan has been granted. What value granted? 10 crore. 10 crore. What is the value of consideration? 1% on what value? On 10 crores. Per year, it is 1% per annum. For 5 years, into 5. If 10 years, into 10. Is clear? That value compared with the actual consideration. Per year, in the given case, 3 lakhs. Into 5 years, 15 lakhs. We take whichever is higher. Is clear? Time of supply for the entire term when the corporate guarantee issued. Issuance of corporate guarantee means banker accepted to grant the guarantee. Is it clear, bro? Any difficulty, my dear friends? Further will come. Don't worry. If corporate guarantee is given for 1 year, thereafter depends. Require a renewal. Not renewable, leave it. Like that, the loan is sanctioning by the bank. 1 year corporate guarantee, further 5 years renewable. That means each time of renewal, corporate guarantee is supposed to be provided. Is clear? In that case, time of supply, when the issuance of guarantee, 10 crores loan amount for 1 year, renewable for 5 years. In that case, 10 crores, 1%, equal to 10 lakhs. Compare with the actual consideration received, whichever is higher in the hands of supplier corporate company who given corporate guarantee. Is clear? Any difficulty? Next year, renewal. That time corporate guarantee. That time of supply. 10 crores into 1%. Compare with the actual consideration. Yes, time of supply differ in the case of loan granted for fixed term. Full value for 5 years, time of supply will stand up front. If it is renewable, time of supply. So everyone will go with what? Renewable. Some companies feel, what is GST? Let us pay, but we want fixed term. Every year should not be referred. Again, loan. We want to consider our growth. Like that, companies are there. For them, they pay the tax early. Is clear? Further, here time of supply, each time the corporate guarantee is renewed. Is clear, my dear sir? Further, suppose corporate guarantee not for even 1 year, less than 1 year, no problem. 1% per annum, na? For how many months corporate guarantee? Sir, in the given example, 6 months corporate guarantee. Is it so? In that case, what is the guarantee amount? 10 crores. 10 crores on which 1% is 10 crores. How much percent comes, Sama? 10 lakhs. 10 lakhs, how many months guarantee? 6 by 12 months is equal to 5 lakhs. Understand? If 3 months, na 3 by 12. 1% multiplied by 3 by 12. So 1 month corporate guarantee, 1 by 12. As simple as 9 months corporate guarantee, 9 by 12. That value compared with the actual consideration, whichever is higher. Is clear? Now, parting. Finally, logically, practically, issue came here. Ayya, rule number 28, sub number 1, second proviso, what it says? If the recipient availing full input tax credit, whatever the value declared by the supplier is of open market value, do not question. Even if you say 10 lakhs, 10 lakhs, 10 crores, 10 crores, 0 na 0. Is clear? That provision, rule number 28, sub number 1, second proviso, is applicable for rule number 28, sub number 2. Rule number 28, sub number 2 is applicable. A question mark. Now the last says applicable. Where they said in the rule number 28, sub number 2, now inserted a new proviso. Inserted a new proviso. Proviso 1. Where? Rule number 28, sub number 2. Proviso 1. Copied and pasted rule number 28, sub number 1, second proviso. Manisile? Puridam? Ardhamautundi kadaya? That means under rule number 28, sub number 2, first proviso says, only one proviso is there which says that if a corporate company giving the corporate guarantee to its related company, where the related company being a recipient availing full input tax credit, eligible to avail full input tax credit, in that case, the supplier, whatever the value he shows in the invoice is the value of supply. Do not apply 1%. Do not apply 1% on corporate guarantee. Even you apply 1% corporate guarantee amount, whichever is higher, do not consider. You consider only actual consideration. If the actual consideration is 2 lakhs, 2 lakhs. 20,000, 20,000. 0, 0. Got the clarity? This question is what? This question says, this question means what? This circular of CBIC says, rule number 28, sub number 1, second proviso will apply. Rule number 28, sub number 2, first proviso. Is clear? Where it said, listen, where it said, amendment it is. A newly amended here. I will bring to a notice. Is the amendment. Rule number 28, sub number 2. Further got amended. See here. Here, by notification, they inserted first proviso. Rule number 28, sub number 2, first proviso. Only one proviso is there in that rule number, sub number 2. Provided that where the recipient is eligible for full input tax credit. Full input tax credit, recipient is eligible. Where it is a corporate guarantee case, the value declared in the invoice shall be deemed to be the value of said supply of services. It is going to highlight, supersedes this one. If this comes into picture, this is not apply. The above not apply. 1% not apply. Got the clarity? That is what here they said in the given case. Whether the benefit of second proviso to sub rule number 1 of rule number 28, which states that value declared in invoice is deemed to be the open market value of in case where full input tax credit is available to the recipient of service, is not applicable in case of falling under sub number 2 of rule number 28? Yes, applicable. We have a proviso to rule number 28, sub number 2. Reading as follows. Proviso has been inserted in sub number 2 of rule number 28 retrospectively with effect from 26 October 2023. Similar to that provided in the second proviso to sub number 1 of rule number 28. Got the clarity? To provide the benefit in case involving supply of services of corporate guarantee provided between related persons. Accordingly, it is clarified that in cases involving the supply of services of corporate guarantee provided between related persons where the full input task is available, to the recipient of service, the value declared in the invoice shall be deemed to be the open market value, even in the case of corporate guarantee given by the corporate company. How to understand? Practical example, my dear. I am going to bring one example. Look here. In the given case, holding company A provides the corporate company to subsidiary company B. A and B are related parties. Subsidiary, how much corporate guarantee given? 10 crores. Subsidiary company is eligible to, the ODC is eligible to claim full input tax credit on the services of the corporate guarantee. Means there is no restriction for availing input tax credit. In that case, 1% of corporate guarantee amount, 1% of the corporate guarantee amount should not be considered. What is the actual consideration they agreed to pay? Value declared in the invoice is how much? 1.5 lakhs. Itself is what? Value of supply. If they said, no, it is only 2 lakhs, then 2 lakhs. No, it is only 0. Do not apply 1%. Look here. Finally, 1% if you apply and corporate guarantee 10 lakhs, amma. Raja, paranga, 10 lakhs, 1% equal to 10 crores. 10 crores, 1% equal to 10 lakhs. 10 lakhs or 1.5 lakhs, which is higher? 10 lakhs. Don't consider. 10 lakhs don't consider because 1% not applicable here. Because full input tax is availing. In that case, value declared in invoice is how much? 1.5 lakhs. Is to be considered 1.5 lakhs for applying GST 18%, which is 27,000 is the GST. Got the clarity? Therefore, I mentioned here key points. The benefit of the provision ensures that declared invoice value is accepted as the taxable value of full ITC available to the recipient. The higher value, 1% of the guarantee amount, is not applied in this given case. Is clear? Further referring to you, my dear. Suppose if the ITC is not availed, fully not available, partly available, or 20% available, something where full kit not available. In that case, 1% will apply or declare whichever is higher. Which is higher? 10 lakhs higher, on which only liable to pay GST 18%. Is clear, my dear? With this, rule number 28, sub rule number 1, class A, B, C, first proviso and second proviso completed, followed by rule number 28, sub rule number 2 and its first proviso completed with the amendments, the law of the land applicable for the coming exam of May 2025 for CA final, June 2025 for CMA final, June 2025 CS professionals on rule number 28 fully thoroughly completed. Is clear? Continuation of this will continue after having a break of 15 minutes. Is clear?
The same case of other than corporate company. What if other persons are giving guarantee?
Other person giving guarantee, they are not coming on rule number 28.
Generally, what is the
Very good question asked, Ma, Santini. Excellent. Now, Santini asked one question. What is the question? Company A given a corporate guarantee to company B. Company B. Listen to me. Company A and Company B are not related parties, are not distinct persons. Of course, not distinct persons. Company A different, Company B different, two different PAN numbers. They are not related parties. Corporate guarantee is 10 crores. Is clear? Now, Company A says, hey Company B, I give the guarantee to you, corporate guarantee. Can you pay something to me? Company B said, yes, I will pay to you 50,000. 50,000. Now, this 50,000 is be considered as open market value, fair value. 50,000 consideration is there. If it is not deliberately kept, see, for 10 crores corporate guarantee, generally take 1% as a yardstick. Is how much? 10 lakhs. Is the open market value, correct? But you're charging how much? 50,000 deliberately kept below the market. Intentionally kept below. In that case, hey, Company A, for you, rule number 27 will come. Rule number 27, class A will come. No, sir. Company A charging 9 lakh rupees from Company B. They are not related parties. Company A is given corporate guarantee for 10 crores. Open market value more or less plus or minus 10%, plus or minus 10%, 10 lakhs. But how much charging you by you? 9 lakhs. Fair. It has sole consideration. Then the valuation, not as per the valuation rules, as per the transaction value basis. What transaction? Corporate guarantee. What value charging for which giving the 10 crores of guarantee? 9 lakhs. Itself is the value of supply. Section 15, subsection 1. Subsection 1. Whole good. Not required to add any additions. Plus or, see, open market value means take market price and your charging price plus 10% or minus 10% from market price. Whatever you charge is open market value. It has sole consideration. 9 lakh rupees open, 10 lakh rupees of open market value is reasonably for a given supply, but you're charging only rupees 50,000. What a variation. Cannot be accepted. Near to that 9 lakhs, 8 lakh 50,000 or 9 lakh 10,000, acceptable. 4 lakh, 5 lakhs also cannot be accepted. Department may demand. They feel it is undervalued deliberately. Rule number 27 will apply. In case where corporate guarantee is given by one company to another company, they are not related parties. In that case only I am packing this. Suppose that company says, no, I am not going to charge anything. No consideration, no supply. In that category. No supply, no consideration. Is clear? Deliberately kept below price, then the rule number 27 will come. Acceptable. Wholly, solely, freely providing. Generally comes here, no corporate company will provide the corporate guarantee to other person. If it provides, then they are called as associate enterprises. Section 92 capital A of Income Tax Act. Transfer pricing, amma. Rule number 92 capital A. Section 92 capital A. That will come into picture. One company giving the guarantee to other company without charging interest. But associate enterprise cannot be considered as a related parties. To become an associate enterprises, 20% sufficient. But here what how much is required? 25% and above required to become a related parties. In case company A provide the corporate guarantee to company B, no consideration, not related parties, then not a supply. Deliberately kept below price to avoid the GST, then rule number 27 will come into picture. It depends. Is clear? 10 minutes break. I will come back to continue rule number 28. 29. Rule number 29 is only the tough rule number 28 because it's elaborately drafted. Corporate guarantee, very much warranted. In India, there are group of companies, many. One company's growth means multiple companies are incorporating for the tax saving, tax planning purpose. So one company is giving to the other company guarantee, corporate guarantee generally happens 99% cases if they are real persons. Therefore, this circular is required to give the clarity. Now, left and right, this circular has been referred all the loop and corner of the provisions practically. In spite of that, you have to ask me. Your daughter.
Also good for partly amount of loan is guaranteed. 10 crores to 5 crores is only guaranteed given by 20%, and balance is not guaranteed.
That is not a guarantee. Corporate guarantee only for 5 crores only. Banker is giving out of their own interest on Nirav Modi 1000 crores loan. But 10 crores loan only corporate guarantee is given. For them, 10 crores only should be considered as a value of guarantee on which 1%.
And also in last Rule 28 Proviso 1 plus there is circular stating that the subsidiary company in India, recipient in India, self-invoice partner, so we can also deem the value to be as nil. So that also holds good for Rule 28 subsection Rule 2 for input.
Correct. Correct. That's what I said. Is clear?
Company to company.
Correct. Yes. 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 Partners of partnership form. ABC partners of ABC and company. Then BCD under partnership form. ABC in a partnership form ABC and company. A and B are partners. A, B and C are partners. In BCD partnership form, BCD and company, in that B is a partner in BCD as well as ABC. C is a partner in BCD as well as ABC. So these two partnership firms are related parties. One partnership firm giving to another partnership firm, ABC giving corporate guarantee to BCD and company, same provision. Is clear? But only as an individual, as a director, if you give corporate guarantee, you are allowed to give, but you should not allow to charge. No consideration. Consideration should be zero. The zero is the zero even for valuation under GST law. Is clear? Individual when not related. Excellent, Shalini. I will explain. Now, in a limited company, Mr. A, Mr. B, Mr. C and Mr. D are the directors in limited company. It's corporate, it's another related company approach for the want of corporate guarantee. Mr. D, hey, my subsidiary company, don't worry, I will give the corporate guarantee to you. Like that, Mr. D, individual director, comes forward to give the corporate guarantee, which is renewable for 5 years. Every year renewable. First year corporate guarantee given. Mr. D is the director. Should not be charged any single rupee. Is clear? In the next year, before the renewal, Mr. D of a director of this company taken retirement. But still a highly net worth person. ABC directors of the company or some other directors not having that much wealth. That banker given the corporate guarantee for 1 year. For 1 year. Next year when you go for renewal purpose, that bank insisting, I want corporate, the guarantee only from D. ABC, your guarantee I want to accept. I want the same person guarantee. Now, this person having a good faith on the company, after company of yours, given the guarantee. Second year renewal. That time, Mr. D is a director, he is an ex-director. Getting some consideration. Allowed? Allowed. Allowed na? Allowed. Got the clarity? That time, 1% of the value of supply or value of guarantee amount or actual, whichever is higher. Are you getting my point? Excellent. Rule number 28, sub number 2 varade. Perfectly accepted. If that is the case, what is the value you charge in consideration? Open market value. What is the value you charge? Is the value of supply. Because now he is not a director, ex-director. Therefore, Shalini rightly pointed out, rule number 28, sub number 2, 1% of the value of supply or actual consideration, whichever here does not arise. Correct, because not in parties. But this ex-director gives the guarantee. In that case, he charges are not charging, sir, gentlemen. No consideration, no GST. Charges are open market value. What he charged? Let us say 10 lakhs he charged. Is the value of supply. Will apply GST. Will apply GST. Got the clarity? In whose hands? Supplier hand. Is clear? Got the clarity? Any further more doubt? Excellent. See you after 10 minutes from now.